Hello all, good evening. So, so let us have a quick recap of what we have discussed yesterday. Instead of discussing the whole first chapter, sir, I am discussing or I am revising only the topics which we have discussed in yesterday's class. Yesterday, sir, we have discussed about the rules for apportionment of credit. What are those? The credit of IGST. The credit of IGST has to be first adjusted with IGST only, and the balance can be adjusted with CGST or SGST in any ratio, in any proportion. Okay, then IGST, only when IGST credit is completely utilized we can start using CGST credit or SGST credit. Then CGST credit has to be first utilized. Only when CGST credit has to be first utilized with CGST, then with IGST, but never with SGST. Same way, SGST credit also has to be first utilized with SGST, then with IGST, but never with CGST. Then to discharge IGST liability, if the IGST credit is not enough or sufficient, then use the IGST, whatever is the available thing. Then you should take first from CGST, thereafter with SGST. Compensation cess can be used only for the payment of compensation cess. Then we have did an illustration on this, one or two illustrations. Then we have started discussing about GSTN. GSTN means what? Goods and Service Tax Network. GSTN is formed as a Section 8 company which is fully owned by government. What GSTN do? GSTN acts as a clearing house. So clearing house na, it clears the revenue, it settles the revenue or credits between center and states. It manages a website called www.gst.gov.in in a common GST system which provides linkage to all the stakeholders. So it maintains a website and provides a linkage to all the stakeholders, all the persons who are involved with the GST. Then the functions of GSTN: it facilitates registration, it forwards the returns to central and state government, it matches the tax payment details with bank network, settlement and computation of IGST, providing various MAS now what? Management Information System reports to government, and it provides analysis on taxpayers profile, and it even runs the matching engine. So what does it mean by matching engine, sir? When a supplier files GSTR1, his outward supplies will be reported to the portal. Then the portal, by considering these outward supplies, will reflect them to the corresponding recipients in GSTR to A to B. So that is the running of matching engine. Then we have discussed about vision of GSTN. What is the vision of GSTN, sir? To become a trusted national information utility. To become what? Trusted national information utility. I mean, across the nation, it should be the one source of reliable information and provide reliable, robust, efficient IT. Reliable, robust, efficient IT. Why IT? Because IT is the backbone which for the smooth functioning of GST. So in a vision statement, if you break down into, there are multiple objectives in the vision statement. One is like to become trusted national information utility. Then the second one is like to provide reliable, efficient, robust IT, which will act as a backbone for the smooth functioning of GST. Third one, to leverage the entire nation. I mean, to connect the entire nation. So instead of every state following a different website or different portal, everything is linked to leverage the entire nation. Third one. And the fourth one is like to reduce, I mean, to make the compliance cost minimal. To make the compliance cost minimal. So if you break down the vision statement, there are 4 points or 4 set of objectives which are there in a vision statement. One is like to become trusted national information utility, to become reliable, robust, efficient IT, which is the backbone for smooth functioning of GST system, then to leverage the entire nation, and the next one is like to minimize the compliance cost. Okay. So now we'll be proceeding with the mission of GSTN. Sir, this mission of GSTN may somewhat looks like functions because based on vision and mission only functions will be coming now. So since we have discussed the functions first, you feel like it's like duplication, but understand based on the mission only they would be functioning. Mission of GSTN. Mission of GSTN. So what is the mission of in GSTN? So write down, sir. It provides common IT infrastructure. It provides common IT infrastructure. It provides common IT infrastructure with central government, state government, and other stakeholders. And other stakeholders. So common IT infrastructure, since everybody use the same portal, same IT infrastructure, it leverages, it connects the entire nation instead of using differently. So provides common IT infrastructure with central government and state government and other stakeholders. Then it provides common registration. It provides common registration, returns, tax payment services. It provides common registration, return, and tax payment services. So this also will come under the leveraging the entire nation, and even can be categorized under minimalizing the compliance cost as well. Okay, it provides the registration. So it's not like you need to go to GST office. So its mission is like the common registration formalities to be brought down, common registration formats, procedures, common returns across India, common tax payment services across India. That is the mission of GSTN. That was being already implemented also. Then third one, collaborate with GSPs. Collaborate with GSPs. So GSPs means we'll write down beneath that also, sir. Beneath the concept of mission of GSTN also, we'll write down what is called GSPs and all also. But first understand, collaborate with the GSPs. GSPs na goods and service tax with the providers. So we'll be collaborating with the GSPs, and GSPs means, sir, first understand, GSPs are certain notified IT companies. They may be developing softwares, ERP packages na in a company. This kind of softwares covers end-to-end operations. Its stock has to be dispatched to the production. It would be covered. when the stock is sold, the billing has to be done. It also has been covered in the ERP, such as like SAP, Oracle. These are called as the ERP package softwares kind of. There are others also. These are certain popular kinds. Okay, so these software providers are called as GSPs. So with them, the GSTN will collaborate and roll out applications. Roll out applications what? Like by launching new applications or softwares through which we could do the accounting or the day-to-day transactions recording. Everything can be done through them, which reduces the compliance cost. Instead of you going to a chartered accountant, cost accountant, you could do it on your own as a taxpayer. So that could bring down the compliance cost. Okay, so that's why they'll collaborate with GSPs to roll out GST applications. Collaborate with GSPs to roll out GST applications. Then provide efficient back-end services to government departments. Provide efficient back-end services to government department. Provide efficient back-end services to government departments. So government department will also get the efficient back-end services. What are those efficient back-end services are here? Like, as I said in the functions of GSTN, analyzing the taxpayer's profile and providing MIS reports. The government will also get this kind of functions like getting a report or getting the taxpayers profiling, their information, everything. So what happens here? So it gives them the efficient backend services. Sir, what it is? Sir, it is under the vision of trusted national information utility. So it's a trusted source for the government to get the information and the report. So provide efficient backend services to the government and backend services to the government departments. Then developing taxpayer profiling utility. Developing taxpayer profiling utility for administration. Developing taxpayer profiling utility for administration. So for every taxpayer, as I said already, a profile will be created. So it consists of all his past data, his return statements, his ITC availed, his taxes paid. So they'll observe the trends also. So whether it is decreasing or inclining, so all these things. So it develops the taxpayer profiling utility for administration. And then it assists authorities in improving compliance and transparency. Assist authorities in improving compliance and transparency. So it would assist authorities in improving compliance and transparency. So by creating this backend services and profiling utility, so it's like helps the authorities in doing the compliances more and even the transparency also, because the payment, registration, everything is the common procedures and everything is visible. So which will bring even the transparency as well. So what are the missions of GSTN, sir? To provide a common IT infrastructure for all the governments and stakeholders, first one. And to provide a common platform for registration, return filing and tax payment services. So instead of a person going to multiple places or multiple websites, so which reduces the compliance cost of them. collaborate with GSPs and to roll out applications. Not only the portal development, whatever the softwares we use for our day-to-day business activities, those software shall also be enabled with the GST functions. So it will help the taxpayer to connect with the GST portal easily and to provide the required information also easily, which again reduces the compliance cost and leverages the nation as well. And for government also, it provide efficient backend services. Efficient backend services, nothing but providing reports and all. Then developing a taxpayer utility. For every taxpayer, a profile will be created. By creating this kind of profiling, for government, it would be easy for administration. They need not to go through the manual bunch of records and they need not to verify. Everything is online. They can on a go, without any much background preparation, they can go directly for an inspection of a person and they could directly log in, and the whole data of such person will be available in the portal within seconds, and then it would even assist authorities in improving compliance and transparency. So this is the mission of GSTN. Then there's one more small concept, sir. Advantages of GSTN. Advantages of GSTN. Advantages of GSTN. Sir, simple advantages only, sir. Sir, whenever you have a problem with the GST related issues or the portal, you could raise a complaint. And then you'll be having the flexibility also, not only to just to raise a complaint. For that complaint, a ticket number will be issued. You could go and check what happened to your complaint. So you have the flexibility to raise a complaint, and for that you will be getting a tracking number called as ticket number. And if for solving the issue or for to give you that clarity, if any information is needed from you, you could have the option to provide that information as well. And then department will be giving timely replies to that. Second one. Third one, whenever you want to know what happened to your complaint, you go and check the status of the ticket. Third one. Fourth one, they will even be giving the comments. Once the issue is resolved, they'll be posting you the resolving comments as well. What has to be done or how it is done. So that resolving comments also will be given. So understand, you have the advantages are nothing but like you have the option to raise a complaint regarding not working, regarding any mismatches or regarding any problem with the system or the portal. You have the option to make a complaint, and for that complaint you will be getting a ticket number as well. Then by clicking into you can open the complaint by using the ticket number, and then you could upload the required information, which would help the GST side people or the department or the portal side people to resolve that one. Third, you could go and check what happened to your complaint. You could check the status of the complaint. And the fourth one, once they have closed the ticket, they'll put the resolving comments also. So you'll be getting the solution for your problem. And fifth one, they even suggest FAQs also. Instead of you raising complaint for everything, there are certain FAQs, frequently asked questions, also be available there. So by using those frequently asked questions, you could get the clarity for your issues also. So these are certain advantages of GSTN. So first one, user can lodge a complaint with GST system and can raise a ticket number. User can lodge a complaint with GST system next using the ticket number provides required information, provides required information. Then whenever needed, user can check status. User can check status of complaint. Status of complaint. Then system provides resolving comments. System provides resolving comments which can be checked by the user. Then they provide even FAQs. FAQs na frequently asked question. They provide FAQs as well, frequently asked questions. So the advantages of GSTN are like the user can lodge a complaint with the GST system and can raise a ticket number. And user using the ticket number provides required information and can check the status whenever he is needed. And then he'll be even getting the resolution comments on the closure of such ticket. And even the GST system will provide FAQs as well. So instead of you raising complaint every time, you could even go and check the FAQs also. Okay, sir, we have almost completed the first chapter, sir. There are only some little small topics now. Quickly we'll complete them. Okay. So the topics which I am going to discuss also, already you might have studied these things in interlevel so many times. So I'm not writing the sentences also fully for the topics which I am going to discuss now. So quickly the summary headings, if you refer also, you'll be recalling them. I'll just give you the explanation and the summary headings. So you'll be recalling whatever those things also. The one concept, sir, features of indirect taxes. Qualities or characteristics of indirect taxes. Features of indirect taxes. So first one, sir. Indirect taxes are a revenue source to the government. Indirect taxes are a revenue source to the government. How? Sir, from many years, there used to be only income tax. So that used to be the major source of revenue to the government. But the increase in service sector, the rapid growth in service sector, then the industrialization, so many industries has came and the public consumption has been increased. So we know that, right? So if you talk to your father or grandfather, grandmother, so if when you ask questions like how they have led their life in their childhood or during their early marriage time and all, so they'll tell like they'll be having only few items available, so they don't have this many gadgets or whatever you think, so many goods and services are not available that time, so obviously their consumption is less. Okay, so if you talk to your grandfather, he might have lived in a small house. Okay, so a small house now, so it doesn't require bricks, tiles, this much electricity, lights, lamps, switchboards, all these goods are not required, wiring, everything is not required. Then he used to go by walk. Then there is no automobile industry itself. Second one, third one. So that time, so they used to rely more on those kind of the local medicines, natural medicines, those only they used to rely. So there is no whole pharma sector. There is no whole IT sector. They doesn't know about IT. He doesn't have a phone. There is no telecommunication sector at that time. Okay, and even so he does not travel much using the flights and all, so there is no much aviation. Railways is there also, it's not so big, very limited. So you understand, right? So that time the public consumption is also less, so there is no much contribution from indirect taxes. But there are changes in the, as we evolving humans in technology, in the inventions, as we evolving, so we are tend to consume so many goods. Okay, so it doesn't, the whole textile and garment industry, so that time they used to have some 3 4 pairs of clothes maximum. So but now you guys are wearing like 3 4 pairs in a single day also, sometimes not every day. So this used to happen, the things. So direct tax is only a major source of revenue, not major, the whole source of revenue to the government at times. But the times are changing. The indirect taxes, the public consumption is being evolved. When consumption increases, savings come down. When savings come down, then the exponential growth of income tax will come down. So now they find out new source of revenue through indirect taxes. Whenever you consume, on them also the government will be levying taxes, so which leads to the more source of revenues to the government. So even now, I mean, even in the recent budget, you have, I mean, you have this knowledge regarding the increase in slab rates, right? Up to 12 lakhs, including the rebate, there is no tax. If it is a salaried person, again he'll be having standard deduction also, so all these things. So then because of these changes in slabs, the government is going to lose 1 lakh crore revenue. How much, sir? 1 lakh crore revenue. So it's not a small thing. 1 lakh crore, 1 lakh crores, it's not just crore or lakh, it's 1 lakh crores. That much revenue the government is going to lose because of this increase in slab rates. But why government has taken such kind of move? How could they compensate? For that, the finance ministry or the finance secretary has answered. What they answered, that money whatever has been kept in public hands, by not taken by the, I mean, if it is tax na, then government will take away. If government didn't took, then it will be in the public hands. So they are expecting this public will again pump this money into the market only. Into the market na, they'll buy something, they'll buy groceries, or they'll go and buy something in Zomato or something. So they'll push this money into the market, and through them, out of this 1 lakh crores, this will be circulating in the market. So from me, this will go to X, X to Y, Y to Z, so like that. So it would pump, and the transactions which we do will increase. The transaction which we do will increase. So then government will get more revenue. I mean, at least 60 to 70% of that 1 lakh crores which they have foregone by way of increasing the slab rates. Again, they are expecting that would be reached by them in the form of GST or some other sources. You got it right? So like that. Okay. So currently indirect taxes, I mean, they are foregoing direct taxes, and again they are collecting it through what? Indirect taxes. So it is becoming a indirect and major source of revenue to the government. Then regressive in nature. Regressive in nature, what does it mean by regressive in nature, sir? You all know this. Irrespective of rich and poor, everyone will be taxed at the same rate. So even if you are Ambani's son and you go and buy a Dairy Milk silk chocolate to give it to your girlfriend for 200 rupees, I mean, the 200 rupees worth chocolate you want to give it to your girlfriend, even if you are Ambani's son, the same tax rate. So you are a poor guy, so coming now February 14th, anyhow it's coming nearby only. So that time you went, so you are not, it's a rich guy, it's a normal poor or middle class boy who is studying CMA final sincerely to fulfill your dreams, your parents' dreams. So with that objective you are doing CMA final, but somehow someday in a bus or something you have met one girl and you want to give her a little gift. So you went to a chocolate store and you bought a chocolate. Then also the same tax rate. Ambani's son, same tax rate. You, common man, same tax rate. So there is no differentiation between rich and poor. That itself is called as what? Regressive in nature. Then inflationary. Indirect taxes are inflationary. Sir, how indirect taxes are inflationary? First understand what is called inflation. The hike or increase in prices itself is called as inflation. Okay, so we know, like 2 years, 3 years back, a commodity might have got for 10,000, but now we need to pay 13,000 for it. So let's say gold is an example. 3 years back, you can buy the gold some 10 grams by paying 50,000 maybe. But now you need to pay 75 or 80,000. So what here, gold is gaining its value, money is losing its value. This is something called as inflation. So how indirect taxes will lead to inflation? So let's say a person is selling a product for 100 rupees. Assume on that there is no other tax, then he'll take only 100 rupees, right? If there is again on that 20% indirect tax is there, then he will not collect 100, he'll take 120 from you. So from 100, the price increased to 120. This increase of 20 rupees is just because of what? Indirect taxes. So indirect taxes will lead to a inflationary situation. Fourth one. So indirect taxes are not just levied on goods. They are levied on both goods and services. So commodities are nothing but goods. There are taxes which are levied on both goods and services. Then fifth one. Shifting of tax burden. Shifting of tax burden. So what does it mean by shifting of tax burden? Every supplier or every person in the supply chain of indirect taxes will try to collect the taxes from his recipient and this fellow from the other person. So like that the tax burden will be shifting from X to Y, Y to Z, Z to A to B until it reaches the end consumer. Only end consumer has to bear the whole tax burden. Till that point of time, the tax burden will be shifting from one person to another. So there is a shifting of tax burden. Next, sixth one. Higher tax base. Higher tax base. What does it mean by higher tax base? Higher tax base na. In indirect taxes, there are so many wide range of goods and services are available for you to levy taxes. It's not like even income tax also. Even when you go to income tax also, you have only a few sources of incomes. Like it could be salary, it could be business income, it could be capital gains or interest or some hardly 5-6 sources of incomes you are having. And then also personal income, there are so many exemptions. All these are available, but when it comes to indirect taxes, there are lot many goods, lot many services available. The base for the government to levy tax is very wide, very high. So that's why it is higher, having higher tax base. And the seventh one is welfare. How it contributes to the welfare? This one I already given a hint while discussing the previous topics, but again I'll explain it to you in detail. See, on sin goods na, tobacco, pan masala, alcohol, these are called as sin goods. On this kind of sin goods, the government will levy high indirect taxes. I mean, they'll be levying at higher rates of indirect taxes on this kind of sin goods. So, on levying higher tax rates, the prices of these goods will increase so much. When their prices increase, the basic economic formula says like when price increases, demand decreases. So like that, they are reducing their consumption of, indirect taxes are leading to the reduction of consumption of sin goods. How? They are levying high tax rates on them. Because of their prices will increase. Once the price increases, then demand and consumption will fall down, which the falling down of consumption of sin goods is obviously welfare to the society only. So like that, they are contributing to the welfare of the society. So these are the 6 or 7 points which are the features of indirect taxes. What are those features, sir? It is a revenue source to the government, regressive in nature, inflationary. It is a tax levied on both commodities and services, and there is shifting of tax burden, and it acts as a higher tax base, and it even contributes to the welfare of the society. So there is a code also for us to remember. If you are following my concept book also, there you will see beside the features of indirect taxes concept, you will see a rickshaw image. You don't understand why unnecessarily or without any linkage he kept here this rickshaw image. So you don't understand, right? So that's the code. Revenue source, regressive, inflationary, commodities and services, shifting of tax burden, higher tax base and welfare. Then benefits of GST. Benefits of GST. GST is a win-win situation across the country. So what does it mean by win-win situation? In any game, one person wins, the other person will lose. But here we are saying like what? Win-win situation. So what does it mean by win-win situation? So in GST, the government will be having the benefits, taxpayer will be having the benefits, as a industry, as a business person, you will be having the benefit, the ultimate end users, the common public will have benefit. So everybody is gonna get benefit from GST. So that's why GST is a win-win situation for the across industry or for the entire nation. So now we are going to highlight and discuss some of the important benefits of the GST. So first one is like, it is a boost to, sir, in previous one, okay, boost to Make in India initiative. You all know what happens when you drink boost, at least how they advertise the boost. Boost is the secret of my energy, right? So understand here, this GST is gonna act as a boost to Make in India initiative. What is the purpose of Make in India initiative, sir? We, instead of importing so many things, we manufacturing goods within India, and these goods should be capable of being exporting. So India should become a manufacturing hub. That is the true essence of Make in India initiative. For that initiative, how GST is fueling, how GST is boosting that. So how it is boosting now? Because of GST, the double taxation cascading are eliminated. Because across the supply chain, whether it is intrastate or interstate, whether it is manufacturer or trader, ITC is allowed. So by doing that, this cascadings, double taxation, everything is gone. So because of this, the cost of the commodities will come down. So me being a manufacturer, I'll get the raw material at a low price, and I could produce it, and I can bring a output for a lower cost than which I used to take in the pre-GST era. So when I can bring a product at a lower cost, I could sell it in other countries also in a competitive prices. So I'd be able to manufacture goods at a cheaper price, and I can make my product competitive, comparing even the goods originating or coming from other countries as well. So in such a way, it is giving boost to the Make in India initiative. It's not only within the country, even globally also, our costs will come down. So we could produce the goods which are competitive and cheaper. Then second one, increase in government revenue. How government revenue is increasing? Sir, if you see, governments are actually, one point of view, it's losing. I mean, misunderstanding is like they are losing. But understand how they are going to get the benefit from GST. Sir, see, previously on sale of goods, the whole revenue goes to state government. But now, out of that also, a share is going to central government, right? Previously on manufacture and on service sector, the whole income used to go to central government only. states didn't got anything from the service industry, but now from services also states are getting a share, from sale of goods also central is also getting a share. So like that they are having incomes. Not only this, previously, since there is no matching concept, there is no system wise checking or default checking, like what supplier reports will only be given as credit to recipient, such kind of checking mechanisms or matching systems are not there, which has leads to so many tax evasions or tax misutilizations. So these revenue leakages has been completely outlined or completely foolproof. These leakages has been covered, so the government revenues are going to increase, and even the base is also furthermore increased. The goods and services which are going to be covered in GSTR, the base has been much more widened, much more increased, so the government revenue is going to be increased. So it is acting as a boost to make in India initiative. There is increase in government revenue. And third one, elimination of double taxation. So there is no double taxation. Why? Because there are no multiple levies from a state. So previously on a single transaction there used to be luxury tax, lottery tax, VAT, all these things. But now those are not there. Na? On a transaction, only a single levy called GST is levied. On a single base of value of supply, tax are levied. So there are no multiple taxes. So which could reduce the double taxation. Creation of unified national market. United, the whole nationwide market. Sir, pre-GST era, when you buy goods, let's say you are there in Hyderabad and you are buying goods from Kolkata, you will not get credit because it's an interstate transaction. CST is levied that you cannot avail as what? ITC. So that's a problem. So since when you have purchased from other states, you are not eligible to get ITC na, so you always try to buy goods within the state because to avail that ITC. So because of this reason, the interstate trade used to be very less, which has been acting as a barrier. So every business person used to do business within those states. And then the other reason is like the law, the procedures, the systems followed in one state may not be the same in another state. But due to introduction of GST, there are no state barriers. Across the country, wherever you buy, from wherever you purchase the goods, you will be getting the input tax credit. So there are no state-wise barriers. Second one, across the country, the same law, same set of procedures and same set of conditions. So it has made easy for the businessman to do business from wherever they want. So it has made the whole nation as a single market by removing the state barriers. Then fifth one, mitigating the ill effects of cascading. So there is no tax on tax also. Why there is no tax on tax? The tax paid at every stage, the tax paid at every stage will be given as credit. So there is no tax on tax. When there is no tax on tax, there is no cascading. So in this way, we are going to get benefited. So GST is a win-win situation across the nation. It boosts to make in India initiative, it increases government revenue, it eliminates double taxation, it creates a unified national market, and it even mitigates the ill effects of cascading. So these are the certain prominent benefits of GST. So to remember this, M for make in India, R for revenue source to the government, D for double taxation, elimination of double taxation, U for unified national market, C for cascading effect, and there is a small k, nothing for it. Okay, Mr. Duck. Okay, so we have discussed about features of indirect taxes and even benefits of GST. So now I'm gonna discuss, sir, understand here. even though we are having CGST, SGST and IGST, we are having CGST, SGST and IGST, except place of supply and few places, except in few places, we are gonna focus much on CGST Act only. So our main discussion is on CGST Act only. Only in place of supply and in some other small topics only will be referring to IGST Act. So our whole and main discussion is on CGST, Central Goods and Service Tax Act only. We'll be learning almost everything from the CGST Act. So then how would we know SGST Act? So don't worry about that. Whatever there is in the CGST Act will be same copy pasted in the SGST Act. In the place of C, central, there will be the state, particular state name. Tamil Nadu GST, Andhra Pradesh GST, Telangana GST, Maharashtra GST, like that. So all the other procedures remains same. So when we learn CGST, it's obvious like we even learned SGST. And what are the differential provisions are there from CGST and CGST Act in IGST, that also we are going to cover here. So you'll have a complete picture of the GST once we complete the final level IDT syllabus. Okay, but section 1 to 6 you already know. In interlevel you go to supply chapter. Once the first chapter is completed, obviously you'll go to what? Supply chapter. Supply, it starts with section 7. So you should have a question like what happened to section 1, 2, 3, 4, 5, 6. Okay. So but in final level we shouldn't have that confusion what are the first 6 sections and all. So even though they are not much important from exam perspective, for you to know and to understand, we'll be discussing the first 6 sections also. Quickly only, within 5 to 10 minutes we can complete those 6 sections. Nothing great or concepts are there in those sections. Okay. So we'll be starting with that. So once these 6 sections related what would be there in the first 6 sections is also discussed, then we successfully completed first chapter. Section 1. Sir, all these we are discussing are from CGST Act 2017. Section 1. It talks about title and applicability. The title of the act and its applicability. What is the title of the act, sir? Central Goods and Service Tax Act. Central Goods and Services Tax Act 2017 is the title. And its applicability. It applicables to whole of India, including the state of Jammu and Kashmir. Okay, from 1st July 2017. So we know the title and its applicability as well. Then section 2. Sir, you could know in every act the section 2 would be, section 1 or 2 will be common thing, sir. Section 2 consists of definitions. Definitions. Goods definition, service definition. So various definitions we are going to learn. Section 2 is not, section 2 we are going to cover throughout the syllabus. Whenever a definition is needed, we are going to discuss that one. So it's not like all the definitions we'll discuss at a time. Okay, then it would be then that those classes will be as boring as like, okay, we can't even imagine. So that's why we'll not discuss all the definition at a time. But before second chapter starting, I mean supply chapter starting, we'll discuss some 10-12 definitions which are needed for us to build the concept. But then there are so many definitions, around 200 to 250 definitions will be there. All those will not be discussing. Okay, that number is increasing also because for subsection also they are again inserting subsections. On evolving of GST, so many other definitions is also will be coming, adding. So this thing simply happening only. So understand, we'll only learn certain definitions now in the second chapter beginning. Then the other definitions whenever needed we will go on discuss them. Okay, so section 2 is completely about what? Definitions. Then section 3. Officers under this act. Officers. Who are called as officers, sir? Section 1 title and applicability, section 2 definition, section 3 officers under this act. Who are called as officers, sir? So those officers, na, the list we are writing, sir. First one. So this list will be again linking in the chapter towards the end, appeals and revision. There is a chapter called appeals and revision. There will be connecting these topics again. Principal Chief Commissioner, Chief Commissioner, Chief Commissioner, Principal Commissioner, Principal Chief Commissioner, Chief Commissioner, Principal Commissioner, 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 Additional Commissioner, Additional Commissioner, Joint Commissioner, Deputy Commissioner, Deputy Commissioner, Assistant Commissioner, any other officer. Any other officer. This any other officer only, na, they are called as superintendents. Superintendent. Okay, so these are the officers under this act. Okay, so there is a hierarchy of officers, sir. Let's like simple, like in police department also we'll see like inspectors, assistant commissioner, deputy commissioner, additional commissioners, DGP. So there is a hierarchy of the department of officers. Same way in GST also there is a hierarchy among the officers. Okay, principal chief commissioner, the higher one, chief commissioner, principal commissioner, commissioner, additional commissioner, joint commissioner, then deputy commissioner, assistant commissioner, then superintendent. So these are the officers under this act, section 3. Then section 4. Appointment of officers. Who will be appointing these officers? Appointment of officers. Board can appoint. Board can appoint. So these officers will be appointed by whom, sir? Board. Board will be appointed. Board, now what is called board? You will be having a question. So board is nothing but CBIC, Central Board of Indirect Taxes. CBIC is the board. So these officers will be appointed by CBIC. Then even board may authorize any officer in section 3 A to H to appoint. So the above officers can be authorized to appoint an officer as well. Right? So these are called as the appointment. How these officers will be appointed? Usually board will appoint, and board may authorize any other officer who are referred above also to appoint them. Then section 5. Section 5 is about powers of officers. Powers of officers. Powers of officers, sir. So they didn't specifically given a list of powers here. They simply said like the powers are not specifically mentioned there. Whatever the powers which were referred at various places of this act are the powers of officers. Powers at outlined at various places of this act. Then the last mention, section 6. It's about authorization of officers. Authorization of officers na, sir, you all know on an intrastate transaction both CGST and SGST are applicable. Then it's not necessary in every case both CGST officer and SGST officer both going to the place of business of taxpayer and both investigating, inspecting, scrutinizing the same records separately. One is for CGST and the other one is for SGST. If one does, then obviously it would be carried out for the other one as well. If SGST officer does anything, then it is equivalently good for CGST as well. If CGST officer does anything, then it is equivalent for SGST officer as well. So when they pass an order, when they take a decision, so then it is both applicable for both of them. So the power has to be authorized. So the power authorization, this section 6 gives like when SGST officer passes any order, it would be considered as the order passed even under the CGST Act as well. So such kind of authorization. So the powers available to a CGST officer are also authorized to SGST officer also in certain times and certain grounds. So that was been mentioned. An SGST officer to act as CGST officer. He will be acting as what? CGST ka officer as well. So if you see, these are the 6 sections, sir. Section 1 is about title and applicability. Section 2, definition. 3, officers under this act. Section 4, appointment of officers. 5, purpose of officers. 6, authorization of officers. Okay. So before going further, we'll solve ITC. Yesterday we discussed, sir. On this, we'll take one more illustration, sir. Then we close the first chapter. We'll take one more illustration on what? ITC related only. Okay. But for that, we'll understand first now the concept of RCM. We'll understand the concept of RCM, reverse charge mechanism. Then we'll be again solving an example by even including the RCM related points. Okay. So RCM. Reverse charge mechanism. RCM means reverse charge mechanism. Reverse charge mechanism. So what happens? See here, we'll understand little clearly. There is a supplier. This supplier supplied goods, services or both to a recipient. The value of these goods are 1 lakh. The value of these goods are how much? 1 lakh. But on them the tax suffered, value is 1 lakh. On them the tax IGST suffered 18%, which comes to, let's take 18,000. Okay. Now usual transaction, what this recipient will do, recipient will pay 1,18,000 to the supplier and supplier will deposit the 18,000 rupees tax revenue to the government. Listening na? Okay. So now, but in this case, recipient pays only 1 lakh. Okay, then the supplier got is 1 lakh rupees. Invoice price is no doubt it is how much, 1,18,000 invoice price. But how much the supplier got? 1 lakh only. Then who will pay the tax money of government? 18,000 who will be paying? The recipient pays rupees 18,000 tax to government. So recipient is the person who pays 18,000 tax revenue to the government. So it's not just the supplier paying, it's who is paying, sir? Recipient. So now we'll have a question. In a usual transaction, supplier pays the tax. So on my inward tax is suffered, I can avail ITC. Right? But here RCM transaction, me being a recipient on my inward, yes, it's my inward only, on my inward, I myself paid the taxes, 18,000 rupees. Can I avail ITC? Yes. Even in this case also, this recipient can avail ITC, can avail ITC 18,000. Here also this recipient can avail ITC. Okay, understand this. Okay, recipient can avail ITC here also. It's not just supply, it's not just in the FCM transactions. Even in RCM transaction also, recipient can avail ITC. So, how's our, he is only paying tax now. How can he himself again avail ITC? You don't bother about FCM and RCM when you are thinking of ITC. Sir, again, very important point. It should register so strongly in your mind. When you are availing ITC, focus only on whether it is your inward or not. Sir, here, forget about who paid the tax to government. Basically, for this recipient, this fellow, this recipient fellow, for him, is it an inward or not? Yes, it is an inward. If it is an inward, he can avail ITC, whatever is the tax suffered. You don't bother about whether it is paid by supplier, recipient or by some other person. Okay. If on the inward supply he has on these goods and services, if there is tax and the tax is paid to government, either by supplier, recipient or by any other person, such tax can be availed as ITC. So tax paid under FCM can be availed as ITC, RCM also can be availed as ITC. Sir, why he has to avail? Here he is availing, here he is paying now. So simple basic max. Here 18,000, here 18,000, both can be cancelled now. It's not like that. We'll be doing, yes, obviously impact may be same, but understand, sir, he'll do those things simultaneously. He'll pay tax under RCM in one hand, and again he'll be availing ITC in the other hand. Understand? So while doing problem, simultaneously he'll avail ITC and he'll be paying the ITC, he'll be paying the tax under RCM as well. One more rule, sir. This 18,000 tax is there. This tax is on his inward or outward. Tax payable in RCM. When you are paying tax in RCM, it's not on our outwards. It's not on your sale you are paying tax. It's on your purchase you are paying tax. So tax payable in RCM, that means on inward, has to be paid only in cash. Has to be paid only in cash. Input tax credit ITC cannot be. Input tax credit cannot be utilized. Okay. Tax payable in RCM, I mean inwards, has to be paid only in cash. ITC, input tax credit, cannot be utilized. You can never utilize the input tax credit for discharging the RCM liability. Always the RCM liability has to be discharged in cash. Sir, why? Again, understand. RCM is the tax payable on your purchases, but understand the concept of ITC. The tax paid on purchases will be given to you as credit, which could be used to set off the tax payable on outwards. Let's say I purchased for 100. Again, I sold for 150. So the tax paid on 100 will be eligible to set off on the tax payable on this 150. Ultimately, what they are doing now, 100 they want to adjust, only on the extra 50 they want to tax. But instead of doing that, they are simply saying me, whatever the tax I paid on my purchase 100 rupees, that I will be taking as credit. And again, the tax which I am going to pay on this 150, calculate the full amount, on that adjust whatever you paid initially, effectively you will be paying only on the value addition 50 rupees. So understand, the tax, input tax credit will be eligible, we'll be getting it on our purchases, which could be used for paying taxes on our outward sales amount. Here the tax you are paying is RCM tax. I mean the tax on your purchase. Tax on your purchase has to be paid through cash only, but tax on sales, on outwards, for that you could adjust ITC. So remember sir, don't confuse again and again. I have observed even in final also, some students will confuse this point, will again come back to me asking doubts also. Register to your mind very carefully. RCM liability shall always be discharged through cash. RCM liability shall always be discharged through cash. Okay, if you are checking whether you can avail ITC or not, don't focus on FCM or RCM. Focus only on whether it is your inward or not. If it is your inward supply, you can avail ITC. Clear? So we'll write an entry also, sir. FCM also will write down an entry. Supplier books. Sale na? Supplier books, it's a sale entry. He'll be getting cash or bank. Cash, bank account debit. How much he got? 1 lakh. Is there any GST payable? No, it's RCM. So he is not collecting any tax. So he'll recognize the whole amount as his sales. To sales. 1 lakh. This is in the books of whom? Supplier. So now we'll write even in the recipient books. We'll understand even in recipient books. So what is in recipient books? See, he is purchasing goods or purchase account debit, and he is having an outflow of cash to cash or bank. How much he is having? Sir, if you see, to cash or bank, he is paying how much to the supplier? Only 1 lakh. To good purchase, how much he is getting? 1 lakh only. And then other 80,000 he has to pay to government. So I am creating it as a liability. The other 18,000 he has to pay to the government. I am creating it as a liability. So to GST payable, because so on payment you will pass the payment entry also. So for now I am passing the payable entry to GST payable 18,000. Once it is paid, once this paid simultaneously, it's not after paying, simultaneously he'll pay 18,000 and even he'll be availing the ITC also. So input tax credit account, $18,000, right? Okay, these are the entries. Sir, why I am writing entries? I am not an accounts faculty, right? But why I am writing now? Sir, entries, if you are having clarity, then everything will be in mind and understand in real world, in practical world. So you can't do anything without knowing entries, right? Because every business will be right posting the entries only with the GST. You need to check them, you need to verify them. So you'll be registering the entries as well. So then you could easily find out, will is there any deviation or the, if any deviation is there also, right? Then, as I said, I'll explain only one RCM service. Then, based on that, we can take examples also. I'll discuss only one RCM service for us to go with the example. RCM on legal services. RCM on legal services. Either it could be a junior advocate, senior advocate, junior advocate, senior advocate, or firm of advocates. They could be junior advocate, senior advocate, firm of advocate, providing legal services. Junior advocate, senior advocate, firm of advocates providing legal services to a business entity so business entity na which is registered to a business entity which is registered and it is located in taxable territory na India, the territory to which GST is applicable, taxable territory. Okay, so if junior advocate, senior advocate or firm of advocates providing legal services to a business entity which is registered and located in taxable territory, then on these legal services it's not FCM, RCM is applicable. RCM is applicable now on this service. The tax applicable has to be paid by whom? The tax applicable has to be paid by this business entity only, not by the lawyer. Okay, understand, right? So now we can go and solve a illustration on this, right? So let's copy down the illustration along with me. Compute GST payable for the month of November 2024 compute GST payable for the month of November 2024 to Mr. Yogesh. Compute GST payable for the month of November 2024 to Mr. Yogesh based on the following details. Based on the following details. inwards and then outwards. First one, purchase of machinery which is an intrastate one, 20 lakhs at 12%. Second one, purchase of raw material which is an interstate one, 10 lakhs at a rate of 18%. 10 lakhs at a rate of 18%. Third one, lawyer service. Lawyer service which is an interstate one, 5 lakhs at a rate of 18%. 5 lakhs at a rate of what? 18%. Okay, then outwards. We have B2B and we have B2C. In B2B, we have intra and we have interstate. Intrastate, 15 lakhs at 12%. Here 20 lakhs at 18%. B2C again, there is intra and inter. Intra, 10 lakhs at 12%. Here again 12 lakhs at 18%. 12 lakhs at 18%. B2B, B2C. Then the opening balances of ITC. Opening balance of credit. What are the opening balance of credit, sir? We are having CGST, SGST, and then even IGST. How much it is? 40,000, 10,000, 60,000. 40,000, 10,000 and 60,000. So understand that here computation of GST payable for the month of November 2024 to Mr. Yogesh based on the following details. Here we are having inwards and outwards. So there are 3 purchases and certain outwards and opening balance of ITC given. So let me explain few minutes how to solve the problem. Again 3-step approach. Step 1, we need to compute the ITC available. When calculating ITC, do we need to focus on FCM and RCM? No. Step 1, when you are doing, you just focus on whether it is your inward or not. Okay, right? So here, what are the opening balances of trade, sir? First, step 1, you will put step 1, computation of ITC available. Then you take opening balance of IGST, CGST and SGST. You take them and then on every inward supply transaction, find out how much is the ITC available to you, calculate, and you will be arriving the total ITC available. While doing step 2, listen carefully. While doing step 2, you should be little careful. What do you need to do? You need to calculate RCM liability separately, FCM liability separately. Why? For RCM, you cannot adjust credit. So RCM has to be calculated separately. So step 2, computation of tax liability. First put RCM liability. What is the RCM applicable? Lawyer service. On that, calculate 5 lakh into 18% and keep that separately. And next line, put as B FCM liability and calculate the liability on the outwards, intra, interstate, B2C, these related liabilities related, you need to calculate. Step 2 also done. Then step 3, while doing step 3, adjustment of credit with liability, you will take only FCM liabilities, with that you adjust the input tax credit. And if any RCM liability is there, that has to be discharged only in cash. Right? Okay. So solve the question on your own. Practice it. Okay, do it on your own, pause for a while, do the question on your own. If you are facing any issues or if you want to check the answer, then only again continue the video. So don't cheat on yourself. Okay, it's something like you're learning for yourself, so you need to do. Go ahead. Okay. Okay, so let me solve. Computation of ITC, input tax credit available. Computation of ITC, input tax credit available. Particulars: IGST, CGST, SGST. First, we'll take what? Opening balance. What is the opening balance amount, sir? 60, 40, 10. 60,000, 40,000, 10,000. Then, the first one is what? Machine. Purchase of machine. How much, sir? How much for it purchased? 20 lakhs. And it is what? Intra. 20 lakhs into 6% and 6%. So it comes to 1,20,000. 1,20,000. Then third one, purchase of raw material. For what amount, sir? 10 lakhs. And it is an interstate, 18%. How much it is? 1,80,000. Then third one, lawyer service. Lawyer service RCM. But while calculating ITC, do we need to focus on whether it is FCM or RCM? No. Check only whether it is your inward supply or not. Yes, it's your inward supply. So you could avail ITC. So 5 lakhs into 18%. Sorry, it's an intrastate. So 5 lakhs into 9% and 9%. So it is how much? 45,000 and 45,000 can be availed as ITC because it's your inward supply. So what is the total credit available, sir? The total credit available is here IGST 2,40,000, 2,05,000, and here it is 1,75,000. So these are the balances of credit available to us. Input tax credit available. Then step 2. Computation of tax liability. Computation of tax liability. Computation of tax liability. So for this again, we'll be taking columns of particulars, IGST, CGST, SGST. So first, we'll be calculating here separately RCM liability and FCM liability. So to have that separate identity, okay, to have this, we need to mention here what separately we should calculate FCM and RCM. Okay, so it's about what RCM liability. RCM liability. RCM liability is on what? Lawyer services. How much it is? 5 lakhs into 18%. So it is 45,000. 45,000. Then we need to calculate separately what? FCM liability. RCM liability is what, sir? It's nothing but the lawyer service. So if you remember, if you link it, lawyer service related ITC also we have, and even lawyer service related RCM liability will also be, RCM liability is also taken. Now FCM liability. We have certain intrastate and interstate. So I am taking straight away first intra B2B, intra B2C. Intra B2B, how much, sir? Here 15 lakhs at 12%, I mean 6%. So it would be 90,000 and 90,000. And in B2C also we are having intra. How much, sir? It is 10 lakhs at 12%, 60,000 and 60,000. Then we are having interstate. We are having B2B and having B2C as well. So if you see the B2B interstate, 20 lakhs at 18%, how much it would be? 3,60,000. And we are having another here, 12 lakhs at 18%. So 12 into 18%, how much, sir? It is 2,16,000. So what is the total ITC available, sir, for us? We should not add FCM here. Sorry, we should not add RCM here. We should calculate what? FCM alone. So don't mistake it again by adding the RCM 45,000 also. If you do that, your answer will go wrong. So you should be careful here. So how much here? So I'm giving a line also separately for you to avoid misunderstanding. 1,50,000, 1,50,000, and here it is 5,76,000. This is the FCM liability. Total FCM liability. Now step 3 we need to do. What is step 3? Adjustment of credit with, calculation of tax payable in cash. because we'll adjust ITC na. Post adjustment of ITC, we'll find out how much is the tax payable in cash. Calculation of tax payable in cash. So what columns we should take? We should take again a particulars column. We should have IGST column, CGST and SGST. So first we'll take what? FCM liability, not RCM, only FCM liability. What is the FCM liability, sir? We are having 5,76,000 and we are having 1,50,000, 1,50,000. 1,50,000. Then first what we should adjust, sir? First we should adjust ITC of IGST credit. We should adjust IGST credit. How much is the IGST credit we are having? We are having 2,40,000. So the 2,40,000 is not even enough for the lawyer service. I took it as what, sir? Intra na? Okay, actually I wrote here as inter, but in some we are doing it as intra. Sir, this is a correction, sir. Understand, if any student has solved it by way of taking it as intra, then here you will be having a change of answer. Here instead of 45 going here, you will be getting here 90,000. So there will be a change in answer. So please remember this. Okay. Here actually it is, I said first as interstate only, but while doing I only mistakenly taken it as intra, so it's my fault only. It's okay, you are doing correct only. So okay, but have a note of it. If it is here, the 90,000 will come here and here it is nil, so then the credit will change. You'll be getting here 1,40,000 plus 92 lakh 3,30,000 here you will be getting an alternate answers, right? And even here also, instead of here 45 and 45, here you will be getting the 90,000. Okay. So IGST credit we are having how much, sir? We are having only here 2,40,000. I adjust the 2,40,000. Whatever is the balance we adjusted. Then CGST credit we are having how much, sir? 2,05,000. But here we have liability of only how much? 1,50,000. The other amount we could adjust it with what? CGST credit can be first adjusted with CGST. If any surplus is there, that could be adjusted with what? IGST. So the balance 55 here out of 2,05,000, 1,50,000 got adjusted here. The balance 55 I am adjusting here only. Then SGST credit. SGST credit also. How much is the balance? We are having 1,75,000, but here we are having liability of how much? 1,50,000 only. So the balance 25,000 I am adjusting here only. Sorry, the balance, yes, 25,000 I am adjusting to what? IGST only. 25,000. So post adjustments, what is the tax payable in cash, sir? Here nil, here nil. So from 5,76,000 minus, you should do what? 2,40,000 and you should subtract 55,000 and you even subtract 25,000. So what is the effective tax payable here, sir? 2,56,000. Okay, sir, however you do, ultimately your tax payable will come as 2,50,000 only here. Okay, maybe it's here 2,30,000 and SGST 20,000, like that it may come. But the total of tax payable, the total outflow from the business will remain same, 2,56,000 only. Plus we need to add, this is very important step, sir. This RCM liability, whatever is there now here, that we need to discharge in cash only. So that will be adding. So RCM liability. So what is the total tax payable, sir, in cash? 2,56,000, 45,000, 45,000. Okay, this is what is the answer. GST payable in cash. GST payable in cash. This is the total amount. Okay. The total outflow remains same. Even the amount in CGST, SGST, IGST may differ because I have taken it as intra, but you students might have solved it as inter as well. So then the total will remain 3,46,000 only. The total outflow will remain same, 3,46,000 only. Sir, unto the students, if you not yet received the concept book and workbook, please message in the group. So we'll see, because from the second chapter onwards, even in the first chapter also, we are having certain workbook questions that I am going to refer now quickly, because anyhow we are going to end the class, right? So 10-15 minutes hardly will take for us to go through the workbook, because in first chapter workbook, they are straight theory questions only. So not much for us to solve any problematic related. But I want you to message in the group if you didn't receive any concept book or workbook from the BCCA side. Okay, so that I'll push from my side also to speed up the process and to send you the books. Okay. So question number 1, if you see, why was there is a need for making constitutional amendment for introduction of GST? Discuss significant provisions of constitution. So this is a Jan 2021 related question, sir. Okay, so the question is like, why there is a need for making constitutional amendment? Why now? Because the article 246 is the problem. Article 246 has 3 lists: union list, state list, concurrent list. So to frame a law, such activity should be mentioned there. But if you know, the power to frame laws with respect to sale of goods is only with state governments. It's not there to the central government. And even to power to levy tax on services is with the center only. It's not with the states. So the cross utilization of power has to be given. So for that, there is a need for amending the constitution and to constitute GST council and to define GST and to make provisions like the tax on interstate supply has to be distributed between center and state. For them, this is needed. So levy of integrated goods and service tax on interstate transactions of goods and services are to be levied and collected by the central government and apportioned between the union and the states in the manner provided by parliament as per the recommendations of council. So for that, constitution needs to be amended. I mean, to share the IGST revenue. First point. Second point, the concurrent powers to the parliament and state legislature to make laws governing on goods and services. Previously, the power to frame law on goods is with state. Law on services is with center. But such powers has to be given to now both of them. For that, constitution has to be amended. Then, with respect to place of supply, to place of supply provisions, will be finding out the destination of goods. Destination. So for determining those place of supply, IGST is needed with respect to interstate trade and all. For them also, constitution needs to be amended. The principle for determining place of supply and when a supply takes place in the course of interstate shall be formulated by parliament. Next, GST is levied on supply of all goods except alcohol for human consumption. However, the following products are not yet notified, they will be taxed only on the recommendations of council. What are those? Petroleum crude, high-speed diesel oil, motor spirit, natural gas and aviation turbine fuel. And the related points also. The union government shall also retain the power to levy duty on excise duty even after introduction of GST. This also we discussed. And President will also form a joint forum for the center and states, namely GST Council. The Council will come into force from when? 12th September. President will constitute the Council. The function of Council is what? To make recommendations to the Union and Center on tax rate, exemptions, threshold limits, dispute resolution, etc. The functions of the Council is to make recommendations to the Union and States on important. So this last point is nothing but duplication. Okay. So this is about the need for constitution amendment. Sir, actually the need for constitution amendment related points are 1, 2, 3 and the fourth and the seventh and eighth points only. But in between, so I don't know, these are actually irrelevant points for the question which is being asked, this point and this point actually, but they are written in the suggested answer, so that's why I have been mentioned here. But as per the question, okay, if you understand the question properly, only the points which have been circled are needed. Next. Sir, in first chapter, we don't have plenty of questions, sir. That's why I have borrowed certain questions from CA final study material also. In the chapters where we have enough questions, I'll not borrow questions from CA final study material. I'll discuss from our material only. I mean, our institute material questions and past exam questions only. If there are not sufficient questions, then we have borrowed from CA final study material. Discuss Article 246A, which grants the power to make laws. So they are asking us to discuss regarding Article 246A. We already know. Article 246A stipulates the Parliament and the legislature of every state that they have the power to make laws with respect to GST. The power to frame laws with respect to GST is with what? Central and state, which is given by Article 246A. So Parliament has exclusive power to make law with respect to goods and services, whereas supply of goods or services or both takes place in the course of interstate trade or trade. Next. Discuss Article 269A pertaining to levy and collection of GST on interstate supply. So they are asking us to discuss about Article 269A. So what Article 269A says? Article 269A of the Constitution says like, GST on supplies in the course of interstate, in an interstate transaction, the tax will be levied and collected by Government of India, nothing but central government, and will be apportioned between union, I mean center and states as per the manner mentioned in the Parliament as per the recommendations of Council. Okay, there is nothing but 50-50. Okay, here supply of goods are both in the course of import into territory of India. I mean import shall also has to be treated as what? Interstate only. Imports are also interstate. The amount so apportioned to the state, whatever is the amount which has to be given to the state government, the 50% shall not be added to the consolidated fund of India. I mean it will not be part of the money which is free for spending to central government, where the amount collected has been IGST. Initially it is collected as IGST, but it is used for payment of SGST. That amount shall also be, will not form part of consolidated fund. Okay, so you understood regarding Article 269A. Then, why dual GST model has been implemented in India? Elaborate. So they are asking why there is a need for dual GST model, because the Indian federal structure is like that. The central and states have separate powers. They are having that independent status. They are autonomous. They are not dependent on each other. So to safeguard that federalism, okay, the sense of the flavor of federalism, we cannot disturb that one. So that's why a dual GST model has been introduced in India. So see, a dual GST model has been implemented in India with center and states simultaneously levying on a common tax base. I mean common value, both will levy tax. The GST levied by the center on intrastate is called CGST, and the GST levied by state is called as SGST. Similarly, an integrated tax is levied on interstate. Why this is? India is a federal country where both center and states have been assigned the power to levy and collect taxes. Both the levels of government have distinct, I mean separate responsibilities, and they perform according to their division of powers as per the Constitution. So they'll function as per their powers. So one cannot exercise the other's powers. So for that, a dual GST model has been introduced to safeguard the fiscal federalism. Next one, sir. GST is a destination-based tax. GST is a destination-based tax which is on consumption of goods and services or both. Discuss the validity of the statement. Yes, we have agreed that the tax revenue on interstate supply, IGST, will be collected by central government, but it would be distributed between center and the destination, the ultimate consuming state. Okay, see, the given statement is valid. GST is a destination based tax on consumption of goods and services or both. GST is known as destination based tax. Why? Since the tax would accrue to the taxing authority which has jurisdiction over the place of consumption. So whichever the state the ultimate goods are being consumed, that state will be getting the revenue. For example, so they have been explained it in through an example also, but in the concept when we are writing, we have discussed examples regarding this, you understood it better, so I am not repeating it once again. Next, discuss the leviability of GST or otherwise on the following. Alcoholic liquor for human consumption. Does on alcohol GST is there, sir? No. What tax is there? The state excise duty is only still continuing even after introduction of GST also, state excise duty is only continuing. There is no GST on alcoholic liquor for human consumption. Then opium, Indian hemp and other narcotic drugs and narcotics. So see, alcoholic liquor for human consumption. Alcohol for human consumption is outside the coverage of GST, hence no duty payable on it. Coming to opium, Indian hemp and other narcotic drugs. On them, sir, even after introduction of GST also, state excise duty is continuing. So there is both state excise duty as well as GST on them. Opium, Indian hemp and other narcotic drugs or narcotics are within the purview of GST. So GST is leviable on them. However, state government has also retained the power to levy excise duty on such products manufactured in India. Resultantly, on opium, Indian hemp and other narcotic drugs and narcotics are subject to GST as well as state excise duties. Next, this question, sir, which I didn't discuss in the material, but for us it is important. See, what are the salient features of GSTIN? It's not GSTN, sir, it is GSTIN. Goods and Service Tax Identification Number. When you register under GST, you will be getting a number, identification number. So that is called as what? Goods and Service Tax Identification Number. When you register under GST, you will get what? GSTIN. It's a Goods and Service Tax Identification Number. So it is assigned to every registered person. Before GST was implemented, all the dealers registered under VAT, previous VAT, used to have TIN, tax identification number. Similarly, service providers were assigned service tax registration number by CBIC. Okay, so previously also there are identification numbers, but for VAT one identification number, for service tax another identification number. But under the GST regime, all the registered taxpayers are consolidated into one single platform for compliance and administration purposes. Even you are a dealer of goods or you are a service provider, you will be enrolled for the GST registration, and the process of issue of GST number will be same. Both the places it is called as GSTN only. So there is no separate naming for goods related and service related. And the process are administered by the single authority. Every business operating in a state, union territory will be assigned a unique goods and service tax identification number. So my GSTN and your GSTN will not be same. Both of us will be having a unique different GSTN number. So the structure of GSTN. GSTN is a 15-digit number. 15-digit number, and it is based on what? PAN. It's a PAN based one. 15 digits. Okay. The format is like, out of the 15 digits, first two represents the state code. For example, for Karnataka it is 29. That means if you register in Karnataka, your GST number will start with 29. In another state it would be 30. In another state it would be 36. So like that, for every GST number, the first two digits will represent what? State code. Then the subsequent 10 digits, 3, 4 up to 12 digits will be nothing but PAN number. So you all know PAN is an alphanumeric number. PAN consists of 10 digits. So the third digit to 12th digit is nothing but the PAN number. The first two digits represent state code. The next 10 digits will be the PAN number. 13th digit will be assigned based on number of registrations within the state. So in a state, if you are having 3 registrations, then the 13th digit will be 3. When in a state you are having 4 registrations, then the 13th digit is 4. Only one registration, then 1. You cannot have 0. If you are having 0 registrations, then there is no GSTN. So it would be 1 or more than 1. Sir, you are saying 13th digit only represents the number of registration. What happens if I am having 15 registration, double digits now? How could you put both of them in the 13th digit? Then they'll use 14th digit also. In general, 14th digit is the Z by default. But let's say you are having 10 plus registrations. So 1 to 9, no problem now. If you are having 10, then the series of Z will change. In the place of Z, there will be X or Y. That would be used. And even there is the last digit also. This is also check code. It may be a random alphabet or number. Why this one, sir? They don't know in future what requirements may arise. That's why this 15 digit is a spare number for them to use in the future. So for the meanwhile, since they don't have any use, they will be allocating some random number here. So first to 2 digit state code, third digit to 12th digit PAN number, 13th digit will indicate number of registrations in such state, 14th is a Z default number, and 15th is a random alphabet or numerical. Next, missions of GSTN we discussed in the material: to provide common and shared IT infrastructure for both central and state governments, provide common registration, return and payment services to the taxpayers, and partner with other agencies for creating efficient GST systems, partner and encourage and collaborate with GST Suvidha providers to roll out various applications which would simplify the GST process and compliances, and the carry out research and study best practices and provide training and consultancy to the tax authorities and other stakeholders, provide efficient back-end services to the Department of Central and State Governments, creating a profiling and create a taxpayer profile for every central and state tax administration, assisting tax authorities in improving compliance and transparency, deliver any other services related to central and state governments under the stakeholder or other stakeholders on request. So today only we discussed this one. List any 3 missions of GSTN. Then advantages also, simple one. Enable the user to lodge a complaint and raise ticket himself. To provide all required information and reducing to and fro communication, the taxpayers can reach the help desk fastly through this, and will enable him to check the progress of his complaint by using the ticket number, and he can go and check the resolution comments also. So when the ticket is closed, what he has to do to solve that problem or to solve that issue, that resolution comments are also being given here. Then based on selection of category, subcategory, they are even having FAQs or user manual, which will help the user to resolve the issue on his own without lodging a complaint as well. Okay. Then the last question, sir. List some of the benefits of GST that may accrue to the economy. What is that one? Creation of unified national market across India, common tax rates, common markets, common procedures, which would remove economic barriers, and by way they are integrating the whole economy. There are no state-wise barriers. Boost to Make in India initiative. How? Because of GST, the goods produced in India will be competitive. The cost will come down. The cost will be coming down. So this would make India a manufacturing hub, and even boost investments, exports and employment, because the manufacturing sector will get benefited, then obviously employment will be created, and then even investments, because in India you could produce cheaper, then the governments of then the companies from other countries will also come and start their manufacturing companies in India, so it will be acting as an investment hub. Even we can produce our goods at a cheaper price, so our goods can be sold in the global markets also at a comparatively cheaper prices, so which could increase or encourage our exports also. The principle of exporting only the cost of goods and not taxes. The boost, because of this our costs come down. Inherently also there is no indirect tax involved or added into the cost, because every tax paid is given as ITC. So it would boost Indian exports by improving the payment position. How payments position? Sir, always we are having a deficit of dollar, but once our exports are increased, we'll get so many dollars, we could do the payments without any hassles. Next, exporters are being facilitated by grant of a provisional refund. So even refunds will also be given so quickly on a provisional basis also, whenever any refunds are needed. Okay, and all the other previous taxes have been consumed, which has led to give ITC on everything. Resultantly, double taxation cascading has been eliminated, and the competitiveness of Indian goods and services in the international market may increase to boost the investments and Indian exports. So these are the practical questions from the first chapter. So with this, we have completed the whole first chapter from the workbook point of view also. Sir, you may think I have went little quick in the workbook. Yes, I agree. These are straight theory questions, sir. So I'm just running through the material once again for you to have that confidence that we have already opened this workbook once. Okay. So otherwise, straight theory questions, it's of no use again and again me being discussed. Okay. Obviously, maybe you might have forgot whatever I have discussed in first class unless you revise. Okay. So don't expect me to again and again explain the same thing. So if it is a theory question from workbook, will be going little quick because we are having so much syllabus, sir. You could see the chapters also. How many chapters we are having? 32 chapters we are having. So we have completed only one chapter as of now. That also basics chapter with almost very less weightage for this chapter also. So 32 into 4 if you multiply also, you'll be getting more than 120 classes, and there are some big chapters, supply chapter, ITC chapter, they'll took at least 7-8 classes also. So that's why, okay, understand the situation and go through the thing. So again I'll be telling this, sir, for every 3 classes, 4 classes, once again I'll be saying this one. Don't postpone the revision process. Once you postpone that, you cannot again come back to that undo. Okay. On Sunday, we'll be conducting an exam as well. If you're an online student, so many of you are online students only, right? So for you, the question paper will be given you in the WhatsApp group. You write the exam and send the scanned copies in the group. So we'll evaluate them. I'll check and I'll evaluate and tell you the marks as well. So don't miss this. Every week we'll be having an exam. Okay. Thank you.